There's a joke doing the rounds in the city that Stephen Hester, Chief Executive of Royal Bank of Scotland until last year, was the only banker ever to switch to the insurance sector to get a higher pay package. That theme's continued today with the news that Royal Bank of Scotland will not be increasing its bonus to 2 times fixed salary because the government has put its foot down and prevented this. What do you think the effect of that is for Royal Bank of Scotland, Oliver?
Well, the effect is clearly they won't be able to pay the bonuses, the size of bonuses they'd like. And it affects particularly the investment banking activities at RBS, which is where a lot of these bonuses get paid. Now, already RBS has been shrinking back its investment bank. It's going to fold this into its corporate banking division anyway, and it's been shrinking it quite a lot in recent years. But this is going to accelerate that process. Any banker worth his or her salt who's a high earner and a top performer will say, well, why should I stick here at RBS where my bonus is being restricted? I could go and work somewhere else. And the impact will be, and perhaps this is very deliberate on the part of the government, to hasten Royal Bank of Scotland's exit from investment banking.
But won't Royal Bank of Scotland just get round it by increasing fixed pay? That seems to be what they have planned for Ross McEwan, the Chief Executive, and Executive Directors in the next year or so.
They might well do that, and certainly if there's somebody they really want to retain, they might do that. But the writing really is on the wall for RBS. However much the bank might want to keep on paying its investment bankers very high salaries, the major shareholder, the UK government, with about an 80% stake, is in this way, I think, making its views on investment banking very, very clear. And eventually that pressure will tell. And maybe Royal Bank of Scotland should just go with the flow and accept this is what its main shareholder wants to do. And rather than twisting and turning and trying to pay people big bonuses, they should say, fine. If the government wants us out of investment banking, we'll get out of it with any consequences that entails.
But doesn't that mean that the bank will be harder to sell at a high price when that time actually comes, if it no longer has that investment banking wholesale activity behind it?
Well, it depends how investment banking does, and there's 2 views on investment banking, particularly the large fixed income trading business, which is where RBS has a lot of its activity. On one hand, some people say that it's doing very badly at the moment, but it's just a cyclical downturn, things will pick up and fixed income trading will pick up and it's just a temporary thing. Others say that this is more structural, that new capital rules and regulations have made this a very difficult business permanently, and so perhaps you're better off getting now while you can.
So which side of the fence do you think Barclays is going to come down on, or more specifically, Anthony Jenkins, the Chief Executive of Barclays, when he announces his strategic review in a couple of weeks' time?
I think Barclays is far more committed to investment banking. It's had a lot of criticism at yesterday's annual meetings for its bonus levels, but that's because it paid high bonuses to its US bond traders to keep them in the business. Having committed to that, really, he's got to stick with it. He's paying the bonuses. He really needs to stick with the business and prove that it can make decent returns for shareholders. Getting out now or pulling back now after having paid these huge bonuses just doesn't make sense.
The test perhaps will be how much he can shrink the bank and still stay in all those activities, because some analysts are expecting quite a big retrenchment. Thanks very much, Oliver.